Okay, welcome back to unearned revenue. We're continuing with the same problem we left off with on Screencast 4.1. So the problem we just solved up here is the solution. I adjusted it a little bit. So I highlighted in blue so you know that this area right here, this represents our adjusting entry. And I added a description. You do need to know in good journal entry format that we always include a description with our journal entry. So here I wrote to record revenue received in advance. A small description just to explain what's being done. So that is the adjusting entry if we were to initially record the cash receipt as a credit to unearned revenue. But there's another way to do this particular problem. So if this scenario were to happen in the real world, we can actually handle it in an alternative way. The second possible way we can handle this is to debit cash when we receive the money and credit rent revenue for $900. So now wait a second. We didn't earn the revenue yet, and we know according to GAAP that we can't recognize any revenue until it's been earned. But what we're going to do at the end of the period on April 30th, our adjustment will reflect the correction of this right here. So instead of, as we did up here, crediting unearned revenue, we're going to go with this method, crediting rent revenue. Okay, so we'll come over here and post that amount on March 1st to our T account. Rent revenue was credited for $900. So now it's the end of the year. The end of the year comes and we have to reflect the piece of revenue that is still unearned. So we received $900 in advance for 3 months' rent. March and April have passed. So we in fact did earn, as we saw above, 2/3 of this $900. So 2/3 of this amount is correctly stated right here. It's this piece, this last month, that did not happen yet, that we have to capture as unearned revenue. So what would that entry be? We would now be lowering our rent revenue for $300 and appropriately recording it by year end as unearned revenue, $300. Okay, so on 4/30, we have a debit of $300 to rent revenue and a credit of $300 to unearned revenue. Okay. So at the end of April, our balance in revenue is the net of a $90 credit and a $300 debit, which is $600 credit, which is appropriate. That's the amount of money that we have earned as rent revenue, $600. Over here in unearned revenue, we have a $300 credit balance to reflect the 1 month liability still outstanding as of the end of their fiscal period, April 30th. Okay, so to be consistent and to show proper journal entry format, we are going to include a description here on our adjusting entry. All entries should have a description, but I'm just showing it in the adjusting entry for this. In revenue, to reduce the balance in revenue and present unearned revenue. Okay. Anything, some description to sort of just highlight what happened for anyone looking at the books. would be fine. And I'll highlight that in blue as well. So like we did above, let's look at this adjusting entry. What did we do? Well, we debited rent revenue. Well, what does that do to revenue? Revenue has a normal credit balance. So to increase revenue, we credit it, as we did in the first entry. So now with a debit, we're decreasing revenue. Our credit to unearned revenue is increasing the liability of unearned revenue. It didn't exist before, and we have to make sure that it's stated correctly. In the absence of this adjustment, if we did not do this adjusting journal entry, how would that affect our financial statements? Well, if we didn't decrease revenue, revenue would still be overstated $300. We would be overstating revenue and thereby overstating net income. And if we never captured this liability, we would be understating our liabilities as well, which can be very misleading. So those are the two alternatives to adjusting entries for unearned revenue. Okay, and maybe it's a little squished in here. You can certainly play back the screencast and stop at certain areas just to reinforce the concepts. But once again, if you have any questions, let me know. Let's go back to the slides for a second, though. All right, so back to our slides. These are the shells. So if we do it that first way and we capture unearned revenue, the entire prepaid amount is unearned revenue, we're going to debit unearned revenue, whatever type of revenue it is, and credit the same type of revenue for the adjusting entry. Or our alternate method allows us or tells us we need to lower the revenue we originally recorded when we collected the cash and properly reflect the portion of our receipts that are still unearned. And we do that with a credit to unearned revenue. Remember, as we saw with accruals, it could be any kind of revenue. Our example showed us it was rent revenue. This could be a situation you're dealing with interest, royalties, or commission. Anything that represents revenue to the company, you can certainly would apply. All right, so I am going to flip through. We discussed the effect on the financial statements, what the adjusting entry accomplishes, and if you don't do it, what would happen? How would the financial statements be misstated as well? So that takes you through the slides that are posted in Web Study for you guys for this particular section of our Mastering Adjusting Journal Entries workbook, and that covers our unearned revenue. Next, we will discuss our prepaids, which are our deferred expenses. However, I would suggest going through the slides, going through section 4 of your workbook very thoroughly. Once again, go through all the problems. Make sure you understand why the journal entries are presented in the fashion they are. There are solutions to everything. If you get the hang of it, cover the solutions, make sure you can create the journal entries on your own. Once you go through the section of the workbook, again, as always, complete the 2 quizzes. I will tell you just what they have been telling me at the AIPB, that the quizzes at the end of every section are instrumental to your success on the exam at Prometrics. So don't skimp on that. Thanks very much. I will see you or talk to you on the next screencast. Take care.